Charlotte McLeod with the Investing News Network, and here today with me is Thom Calandra of the Calandra Report. Thanks so much for joining me today.
Oh, thank you, Charlotte. This is like round 6.
Yes, yeah, we've been talking for quite a while. I think the last time we talked was in New Orleans, towards the end of last year. What are you seeing from the resource space since then? We're in a new year. Is it going to be the same as last year?
Well, Charlotte, I'm still, I'm still that kind of guy who believes in $10,000 gold. Obviously, I don't know when that's going to happen. And I'm a little frustrated sometimes, just like the rest of the resource mining sector. I mean, why would you want to be in this sector? Obviously, my family, my investors, my subscribers are making money, but rarely is it an exploration company or a gold production company or a development company. These days it tends to be a media company or a Halifax incubator or an immunotherapy company. Mm-hmm. So it's few and far between where we're getting some of the exploration successes. Why is that? Well, it's a tough market, as you know. If this were iron ore, we could say that 3 companies control, I just saw this great statistic, 3 companies control something like 65% of all the seaborne iron ore in the world. Mm-hmm. That's power. But can you say that about gold? I mean, if you want to find out who controls 2/3 of the world's seaborne gold production that's going somewhere, right, to get bought, either for fabrication, for jewelry or whatever. 3 companies? No. 300 companies? No. 3,000 companies, maybe. I have no idea. So that's a big negative. There are other big negatives. We've had this, this kind of like, whoa, everything's up 25% since the middle of December, late December, and it is. Whether it's an exploration company or a gold production company or a gold development company, copper companies too. They're all up 25 to 35%. Will it last? Well, I hope it does. But there are still a lot of factors, and one of them is we're our own worst enemy. I mean, obviously, I'm American, I'm from California. The US dollar is a negative sometimes. It's also a huge positive if you happen to be a holder of gold in anything but US dollars. Gold and other commodities that are denominated in dollars, which are almost all commodities are, they're all at or near record highs. I mean, here in Canada, you go out and buy an ounce of gold, it's expensive in Canadian dollars. Why is that? Because the US dollar is so expensive. Mm-hmm. I think that's a positive. And when we see I don't want to call them El Cheapos, but when we see the folks in the world, like India, for example, who really are loath to pay tremendous amounts of rupees, for example, for their gold, when we see them finally throw in the towel and say, okay, I got to own it, even though it's at a record high, you're going to see the momentum acceleration factor mirror that of the internet companies in the late 90s and early 2000s.
Okay, so in this environment, how do you keep yourself excited? How are you deploying your money?
Well, first of all,
maybe you're not excited anymore. I don't know.
No. I mean, let's face it. I'm a long-term investor. Mm-hmm. I like to tell people that, in fact, there on the Yukon panel that I just moderated, I like to tell folks that it's okay. I can own things for 15 years. In fact, I own the original Ivanhoe of Africa since 2003 when it was a private company. It's a large holding at home. I could have sold it at 2.5 times the price. I didn't. I believe in holding things, but sometimes that can be painful. I mean, I own stuff in the Yukon, in Nevada, in Mexico. I've thrown in the towel on Colombia. Terrible what's happening there right now, although I think it's a beautiful country. Just the idea of the rebels is tough. But I own so much in terms of mineral exploration, mineral development, as in copper and gold companies, and a little silver, and a lot of platinum and zinc, and some tin, for long periods of time. Now, it hurts, right? God knows I don't have to own it on margin because we made money in other things, right? We made money in market watch, financial publishing, in Tencent Holdings, Illumina, which is a genomic tools company, IMV of Halifax, an immunotherapy company. I'm doing well in everything outside of gold, silver, copper, tin, platinum, palladium, etc. Right? I am hopeful that the trend continues and that we break through to $3 copper, to $1,300 US gold, to $20 silver, to I'm hoping, praying for a comeback in platinum. We're seeing palladium go nuts because of the non-diesel factor, right? Especially in Europe. So, you know, trying to stay grounded. Sometimes it's not easy.
So we don't know when, but do we know how that happens potentially? That upward momentum in these commodities.
If I could say how, I would be.
Yeah.
You know, I'd be the Pope of Greenwich Village, to mention a favorite movie of mine from long ago. I would say there are 4 or 5 ways that could happen.
Yeah.
One is that, you know, we are seeing a slow consolidation of companies. We have to see so many more Newmont/Goldcorp mergers before they become meaningful, because this industry is so fragmented that it hurts. So we have to see consolidation of companies. We have to see investors turn on the light bulb. I was just at speaking at a conference in Washington, D.C. this week on the future of currency. And it was shaped around gold plus the blockchain. As you know, the cryptocurrencies have gotten crushed, as they should. But you know, Charlotte, I look at these cryptocurrencies. They call cryptocurrencies an inflation hedge. That's a joke. The blockchain is real, by the way. The blockchain is very real. We're seeing it used for everything from QA/QC quality control to the sale and distribution of cosmetics, shipping, mediation, meditation. Can you believe they use the blockchain to coordinate meditation around the world in groups? And I believe in that. But the idea that cryptocurrencies are an inflation hedge, that's a joke. Limited amount of Bitcoin or Ether or whatever. No, because one, we've seen a tremendous consolidation of price, and two, it's like they keep throwing new Bitcoins and new cryptocurrencies onto the pile. If the cryptocurrencies could have the run that they did, right, and these ICO tokens and quite a few other investments that compete with gold, I don't see why we can't have $10,000 gold.
Right. I'm going to take you back to the comment you made about mergers and acquisitions. So I've heard a lot of people say they didn't like the deal we saw this past week with Newmont and Goldcorp, but you think that's a good thing is for the sector?
I think that I think as an industry trend, it is. You know, as far as the economics, I mean, I think it was a cheap deal. I've never been a big believer in the largest companies unless they really get their act together. Because, you know, I think that you're going to have to see Newmont probably shed some Goldcorp properties, hopefully not in the Yukon, which I'm a big believer in, but elsewhere. I would love to see, you know, the Rand Golds and Newmonts and Barracks of the world really start to like turn on the turbo when it comes to exploration. Right now, you know, as we know, there have been very few real new fresh dollars put into exploration in the past 10 or 15 years. Part of the challenge right now with the industry. I want to see fresh exploration by the big companies. I just don't want to see them going out and buying their exploration, right? But at the same time, consolidation is good. And if we see 50 more of these deals, which we won't, but if we see 50 more of these $5 and $10 billion transactions, you know, well, let's say 20 in 2019, I'll be happy, because then we'll have fewer companies responsible for their own fate, and I don't know how to put it, sewing up the fragmentation of the gold business, and not just the gold business, but a lot of the metals.
Yeah, and looking at other metals, are there any you see really particular opportunity in?
Yeah, I love
year?
tin, Charlotte,
okay,
tin.
Good.
You know, I went to see a tin company in northern Mexico, northern Morocco, excuse me, and love them. They trade in Australia. I love zinc. Of course, lots of people love zinc, right? I love the idea of the zinc storage, a zinc-based storage cell for EVs. Okay, it's very experimental, but I think we could see it happen. I think platinum is going to make a comeback. It's a beautiful metal, and I don't think we've seen the end of catalytic converters. You know me, I talk about cheapos. I'm a cheapo. I like to buy things on the cheap. Platinum is cheap right now. Everything's cheap, of course. I'm a big believer in copper. I think copper at $2.80 is fairly cheap, and I'm glad that I own Ivanhoe Mines, which has Kamoa-Kakula in the Congo, which, by the way, has its own problems. They call it the DRC, Democratic Republic of the Congo, but it's not democratic at all. So I'm not going to call it DRC Congo. I'm just going to call it the Congo. But I still think that they managed to get the mines running and out on time. So aside from the politics of the Congo and South Africa with the platinum palladium, I'm very, very hopeful that we'll see some big home runs when it comes to mine development, more original exploration in Central Africa, Western Africa, and South Africa.
Those are very energy-focused metals. Does tin have that angle too, like that battery energy angle for you? Is that
yes, but not as much. It's more of a big substitute as a soldering metal.
Okay, I got
you know, because people don't want to use lead anymore.
Right. Okay.
And it's a good. Tin is an element. Who knew, right?
Yeah.
You know, I only found that out like a couple of years ago. I'm not a chemist, but tin is an element. So you are seeing tin as a something that's going to be important as a possible backup for aluminum. You know, when it comes to a lot of things, utensils, but mostly big substitute for lead, which, as you know, can be toxic, is toxic.
Yeah. Okay, that's good to know. As we are wrapping up a little bit here, what advice would you leave investors with for 2019? Your best piece of advice?
I would say be as skeptical as you can about resource companies. I mean, let's face it, anybody can get into this business. You know, it's not as easy to get into some of the businesses that surround us in our tech getting. You know, you can't just get into and play hardball and fastball with the internet giants of the world. Okay, you need serious capital. In this business, as you know, here at this actually terrific Cambridge House conference, I'm impressed by the number of companies here this year.
Big this year, yeah.
It is big this year. It reminds me of the early 2000s, right? I would say be skeptical. Don't believe that just because Johnny or Josephine, geologist or investment banker, comes along and starts a mining company, that it's going to be successful. You have so many challenges. Oh my gosh. You have jurisdictions that are bogus or that have environmental regulations or change the rules of the country. You have bad luck. You have, people talk about large, I have like a 50,000, 25,000 hectare property. That can be a negative. I mean, think of how many times you're putting the needle in the haystack. I don't care how low your exploration costs are. Somebody just came up to me and said, we have like $30 an ounce exploration costs. Yeah, and how long is that going to go on for? Another 20 years? You have companies that say, I'm about to go into a partnership. About to go into a partnership, and this partner, this 20% partner, is going to resurrect us. And you know what? The fact is that sometimes these take years and years and years before you see them happen. Unbelievable. And yet, you're holding the stock and it keeps getting compressed and compressed and compressed. Plus, we have other things. We have bad luck. We have the strength of the U.S. dollar. We have competing investments. that take away from
Sure, yeah.
from elements, not just gold, but other elements. We have fraud. We have incompetence. These things are like so ripe in this industry. Sometimes it drives me crazy. So, I keep my fingers crossed. I try to do my due diligence. I don't invest in anything anymore unless I know the investors and the executives and the geologists. I've been burned so many times that I have to change my pants. That's how many times I've been burned. Like more often than I'd like.
Okay, that's great. I think we'll leave it there. That was really good. Thank you so much.
Well, thank you, Charlotte.
Thank you. Yes,
It's a pleasure. It's always a pleasure.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Thom Calandra of the Calandra Report.